Hello everyone, I'm Carlo and welcome back to CMC Markets Trend Tracker series. Today I'll be analysing gold, oil prices and the Aussie dollar. So let's get straight into the charts. First off, we have the gold price. This is the daily chart here in front of us, and two key reasons for gold being higher throughout 2024 have been one, geopolitical tensions throughout the Middle East, and two, central bank demand. Let's just focus on central bank buying. Why has that been the case? Well, obviously central banks globally manage their reserves, traditionally in a whole range of currencies. The Japanese yen has been extremely weak over the last 2 years, and gold has picked up the slack. So we've seen an increase amongst numerous central banks globally into gold. So in addition, here you can see the very strong uptrend throughout 2024. As I mentioned, geopolitical tensions in the Middle East have been very sensitive for gold traders. Most recently, Iran downplayed Israel's drone strikes in what appeared to be a move aimed at averting regional escalation. So that's why we've seen a drop of a few percent in gold back to that 20-day EMA, which has been very good support since early March, as you can see on the chart. So a little bit of a pullback there. However, the tensions in the Middle East are still there, and that is why the gold price remains very elevated throughout 2024. And technically, as I mentioned, gold prices pull back to that support line in yellow, the 20-day EMA. The uptrend does remain in place, and that's supported by 20 above the 50 EMA. But it is losing momentum. The stochastics oscillator down below has turned south. Therefore, where to from here? Well, you've got support initially at 2,313 US an ounce, and then 2,220 on the daily chart. And lastly, 2,150. They'll be acting as decent supports going forward. In terms of resistance and where to from here, well, it'll depend on escalation or de-escalation in the Middle East. But that most recent high of 2,431 is your immediate upside target as we move ahead in gold. Next, let's take a look at oil prices. And here you can see we've got a daily chart on the WTI. Now the WTI has pulled back from recent highs around $87 a barrel after Iran most recently said that they will not escalate conflict with Israel. Now, it is clear when trading oil that oil prices remain sensitive to an escalation or de-escalation of tensions in the Middle East. Now, the Middle East situation, if it de-escalates further, then markets most likely will shift their focus back to supply and demand fundamentals. For example, this week we've got another measure of US inflation, the Fed's preferred measure, which is US Core PCE Price Index. Technically, on the daily chart, the mentioned here, prices pull back to that key support line in blue, the 50-day EMA, which has held prices since middle of February on the chart. And in particular, the last 4 trading sessions where the oil prices come off, it bounced off that line numerous times. So that continues to support the underlying trend, which is up. You can see there clearly 20 EMA by the 50 EMA. However, momentum has clearly dissipated with the stochastics oscillator falling from an overbought position a few weeks ago to now into oversold territory in 2 weeks. So as I mentioned, that signals a loss of momentum and a potential end to the uptrend. So for traders going forward, just be aware of support at 81.70, 50 EMA. If that does crack, you've got that $79 a barrel mark, which potentially can be a target for shorts. On the upside, around that 87.60 mark that we saw in early April, they're recent highs. So they're the kind of levels or range that West Texas crude oil may stay within over the next few weeks. And finally, we have the Australian dollar chart. Now, I've thrown in the Aussie US chart here because it was a US dollar move last week. There's a few things going on. But most importantly, markets, traders, investors are now repricing potential Fed Reserve rate cuts this year to more of a scenario of rates are staying high for longer and the possibility of rate cuts are being delayed. And that was further supported by comments from Federal Reserve Goolsbee. Goolsbee said progress on US inflation has stalled. Also said makes sense to wait and get more clarity before moving on rates. So the US dollar really gained last week on those comments, as well as safe haven demand following Iran's missile and drone strikes on Israel and subsequent Israeli retaliation. Very much a US dollar story. Now, this week we do have, well, tomorrow we've got Australian CPI data, which is key. And later this week, US inflation data through the measure of core PCE price index. Technically, on this daily chart here, you can see the Australian dollar is in a downtrend. It broke previous key support around 64.50 and accelerated lower last week. Downtrends in place, the 20 EMA below the 50 EMA, and diverging. And keep an eye on the stochastics. They've moved into, they were in oversold territory and then just popped back higher again. There's a few headwinds coming up in terms of technical resistance lines. The 20 EMA around 64.90 and the 50 EMA around 65.25 should be front of mind for all traders. If the CPI is much lower than expected tomorrow in Australia, then we'd likely see renewed weakness in the Aussie-US currency pair, with the next support coming in around 62.85. That concludes my analysis for today's Trend Tracker series. I'll see you in the next video.